Hello. So finally here we are at the beginning of April. Let's take a dive into these markets. First of all, to start this week although we have a holiday, Easter holiday this weekend coming up in Europe and Australasia and so on, it's not a holiday in the US. So even though it's Good Friday, there will still be non-farm payrolls on Friday, and Monday markets will resume as normal, even though it's Easter Monday in the USA. It is spring break in the USA, which is a little bit different. So it's like 2 weeks holiday, and it's just like the Easter school holidays in the rest of the world, but not a federal holiday and not a bank holiday, and the markets will be open Friday and Monday this coming week as normal, and I'll be here too. Okay, so first off, this week we do have those non-farm payrolls, and we've got a couple of central banks this week as well. So let's talk about that. First of all, we're in a monetary policy cycle where the central banks are hiking, and there were three ways that they're going to stop hiking, or that cycle is going to turn. First off, they would have unacceptably high unemployment, and so the JOLTS number, which is the job openings number in the US, will be important tomorrow. The second way that they would end this tightening cycle would be if interest rates and inflation dropped significantly, or price pressures reduced in a sustained way. That hasn't happened yet. And thirdly, if there was some other stress in the system or something broke. I think we saw that there was the potential for that in March with the bank stress, but that seems to have gone away. And as long as that stays that way, I don't see why the Fed wouldn't hike another 25 basis points this at the beginning of May. So that next meeting's still a month away. We've got a month's worth of data to get through, and that data will tell us, I think, whether the Fed will stick on another 25 basis points or not. As for this week, tonight or tomorrow, we have the RBA, Bank of Australia, and then on Tuesday we have the Bank of New Zealand. In January, the Bank of Canada announced a conditional pause, and the market took it as tightening was likely over, even though it was just a pause. But likewise, the Bank of Australia are expected to pause tonight, tomorrow at their next meeting, and the market is discounting a cut for later on. So if that happens, let's take a look at these currencies. Here we are, sideways in a big, we've really been in a big correction pattern since the start of March. Let's go to the daily chart here. You can see we are sideways with flat daily moving averages. Big picture, the rally that we made from in last autumn to the high that we made at the beginning of February, we are in the middle of that range. This is the 50% of that range. That was the support on Friday. That was the support, in fact, of this little tiny sideways range that we've been trading in around this 50%. The high of this range is the daily 200 moving average, and the low of this range is this 50% level, which is at 0.666. Quite, if you go back in time, actually, in the Aussie dollar, we've been at this level before, and it's quite interesting to me because I remember back, this is how long I've been trading, but back in 1998, look at what an important level here. This you can see back at the highs in 99. You can see what an important level. We go left all the way back here, 87. This 0.66 level is a really important pivot level in the Aussie dollar. So if they were to pause, I think that we are likely to lose this 0.66 support level. If they don't pause and they continue to hike rates, we are likely to see a bigger bounce here. And because, let's look short term on the weekly, this low to high, we're around about the middle here. I'm going to be looking to see if we can get back above this 38.2 fib level and back above these weekly moving averages, which would put us back above the 200 moving average. So far, basically, since the beginning of March, this price action has been pretty ugly and a bear flag, and I think if they don't hike, if they pause, that the Aussie will drop. And the Aussie dollar's favourite fib level is an 886 retrace, so I would not be surprised if we drop down to 0.628 from this 0.666 support level. That would be the target, and then it would be a big, wouldn't it, A, B, C, and that would be a really good leading indicator for the dollar. Similarly, we've got the day after the RBA this week. We'll look at it again. We've got the Kiwi dollar, but that's in a sideways range. When I look at the euro, again, from the high that we made in December to the low that we made, sorry, December of 2021 to the low that we made in September 2022, we've paused at the 50% mark. So sharp drop back to the 50% level. That's where we couldn't get above in January, and we are just underneath it. I think we could squeeze a little bit higher, but I'm really only going to be bullish in the euro versus the dollar if we can get above this 1.094 level. So that's what I'm looking for on the upside, and it's a little bit of a tricky level. Shorter term this week, I feel like we've had a big rally. Maybe this ABC correction is over, but that's really kind of key resistance, and that's going to cap us. And remember, it is a big holiday this week in Europe. Again, the pound, I was looking at this sideways range, flag, channel, couldn't get above 1.24, but if we do break out from 1.24, I think we're in our wave, big daily wave 5, and the target is 129. So shorter term, let's go to the 4-hour here in the pound. We said as long as we didn't break kind of underneath this 236 fib, which we have not, that's held very nicely. So we're bouncing from our 236 fib at 122 in the pound. I'd like to see the highs retested, so it's pretty hard to buy it straight into that resistance, but if you can get a nice lower time frame entry or a 15-minute, so a pullback entry, so and then a break above this 15-minute 200, that would be my target, and you might then get into a bigger swing going higher. But I think the market's going to be looking quite closely at what, first off, what the RBA do overnight, and secondly, the job openings numbers, the JOLTS numbers tomorrow in the US. Okay, so this is all about the dollar, isn't it? And everything else we're going to look at is priced in dollars and based on dollars, the bonds and commodities, because we're going to talk about crude oil. When I look at this weekly chart here, looks like we've had a big drop, rally back to these moving averages, rally back to this previous high. Everything just looks pretty bearish, doesn't it? And we look like we're setting up to continue to the bottom of the range. The problem is, after a big 5-wave move, you really want to see 3 waves. And if I go down to the daily, it's really not clear that this was 3 waves. So I'm still looking for that bounce to sell the dollar. Now, it might be in a correction that we come all the way around a double bottom and do that. It might be that we rally from here and we do a big ABC and do that. Or we might just retest these highs and a 61.8 of this first swing. But I do think that there's a potential. I'd like to see a bit of a bigger bounce, if you like, for the dollar. If I go down to the 4-hour, we've gotten above the 4-hour moving averages, which we did here, and then we just carried on lower. And it's quite possible that we carry on lower here, but I'm watching this consolidation pattern here, this sideways range, if you like. For a breakout of this would tell us which direction next. And I think if the dollar was to break higher from this sideways consolidation, I would be potentially looking for a retest of the highs, maybe that little bit higher before we go lower again, and this would be bearish. Another leg lower of correction for most commodities that we're looking at, for example gold, silver and oil and so on, although oil has got its own macro drivers at the moment. We'll talk about that in a minute. Now if we look at bonds, because they are quite a good correlation with the dollar, potentially. So the same thing here. In this 10-year, I was looking for an ABC correction. I was looking for it to squeeze a little bit higher to 117. We may be done here though at this weekly 50 moving average, because we are back underneath this 61.8 level. That points to markets just rallying from here and then not being. But if we were to close back above, I still think, and you can see here on the daily, that I still think we could squeak higher from here. See here on the daily, it looks like to me we've done 1, 2, 3, 4, 5 up, A, B, C, and we could easily see another leg higher from here. Clearly this 115 level is going to be key. That's what I'm watching for. If we can break above 115, we're headed to 117.29, and the dollar should rally as well. That's what I'm looking at in bonds. Same thing here if we look at the 10-year yield. Here we are in, here's a weekly chart of the 10-year yield from March 2020. So 5 waves up potentially. We could potentially be in a bigger 3-wave rally to these lows, or we could already just hold this 236 fib and rally from here. It's not clear, but that 3.4% level is going to be key, and what those other central banks do is going to be key. That's what I'm looking for. This could, remember, just be a 3-wave correction, and we could just be on our way back to the top and potentially higher again. So key support, sideways range, we've been in it for a month. Let's see if April gives us the kind of, after the March correction, let's see if April gives us the blowout from these sideways ranges. That's what I'm looking for. So let's take a look at these commodities, because first off, so a whole bunch of OPEC countries got together overnight and announced production cuts in oil. I'm looking at continuous futures contract, and I'm looking at 2 exclamation mark, which means it's not the front month, but it's the second month out. And the reason that I do that is in the front month, there was this horrible anomaly in March, April 2020 when they couldn't deliver the front month and it went below 0, which wrecks the chart. And I found that by using the second next contract in front with this 2 signal, it takes away that horrible distortion, and we're in a really good place with this chart. If I unlock this, let's start at the beginning, and we'll go all the way back to this 98 low, all-time high, and these lows. Let's go here. So you can see these fib levels have worked really well, very sharply in oil. I've gone from 86 to the high that we made in 2008. 786 pullback, 236 back to the middle. This 50% was a really important pivot level. That's at 78.90. And then we did another leg lower down to this messy 886, got above the 786 again. 50% was first target, 236 was second target. That's where we went, and here we are back at the middle again. So 78.90 based on massive monthly levels from 1986 is a really important level, and isn't it a surprise that that's exactly now where our support is today. Huge 50% level, and look left, this is still an important level, though it's a little bit washed here. Sometimes those levels become really important again. So 79.90 is key. Let's go back to that monthly and we'll put our fibs on the other way. We'll hide this. Because remember, oil loves a 786 fib. And you can see here, we've done that 786, 38.2. And normally when you've done that, you go back to the middle of the range. Because, so we've got important support at 79.90, haven't we? And now I would say that this 50% level going the other way, which is 82.60. So we've now got a really kind of tight, important $3 range that we're in. 82.659 or 82.60 higher on the top side and 79.90 underneath us. And a breakout of that range will tell us which way next. So underneath 79.90 in oil, I think we're likely to fill the gap, do a bigger pullback, perhaps down to 72.50, and then before we do our next leg higher. If we can close above 82, that are our 82.60 level, 82.59, I think we are likely to continue higher, and I'm looking for the top of the channel up here at $97, $98. So a long, isn't so? If you're wondering where is the long entry in oil to jump in on this move, first off, I'd like to see us go sideways and hold that 79.90 on a daily close. Set up, we're far too kind of overstretched at the moment. It needs to calm down. And even if we get up to 82.60, we could go sideways in this range. Oil's very good at that. So we're going to look for some sideways consolidation in oil. And if we don't fill the gap, then a retest of this level should send us higher, and we'll keep going. If we fill the gap, then, in other words, if this is a wave 1, 2, 3, we're going to look for a 38.2 retrace. If we get underneath that 79.90 level, 76.14, and potentially 50% of this swing would be 74.40. But 79.90, based on big monthly levels, is our key support for now. Let's see what the US makes of all this. In gold and silver, a lot of what happens next in gold and silver is going to depend on oil. We're looking for a three-wave correction higher in oil, and we're looking for a three-wave correction lower in gold and silver. At the moment, let's go down to a 4-hour. At the moment, this potentially is a, I don't really like a triangle in this position. Potentially, we've done a three-wave correction, and this is just a retest of these lows. Isn't it? Lower, high, and up we go. And so a breakout of this upper trend line should see a big swing lower in gold. I actually prefer this as a bigger ABC correction. So if dollar breaks higher, I think that we could see what I'm looking for here is an ABC, and I'm looking back for that 1920 level in gold as a really nice ideal buy level. And if we go back to the weekly chart and we go all the way back to, gosh, 2011, you can see why I really like this level. It's become an important level. You can see it became the lows, the highs, and couldn't close underneath it here. This is a weekly, so this 1920 level would be a lovely place if we could come back to it to buy in a three-wave correction. If you miss it, of course, then you can buy it on the breakout and a pullback. But that's what I'm looking for in gold. Another leg of correction, and then higher, hopefully. Obviously, if we break those support levels or come back too far, that's not going to happen. This is a daily chart of silver. Here we are back at the highs. When I'm not sure if we're going to keep going or not, I'm going to put my fibs high to low. This is really going to be all about the dollar. So here I've got my fib high to low 886 fib level 24.09. That means that the key support is at 2362, which is the 786, because if we close underneath that, we're going to do that 886 back to the 50%. So, and then we've got a great place to look for support, which is also the daily 50 in silver. But if we're just going to keep trending higher, then 2362 will be support. See how each of these other fib levels was support, resistance, support, support, you know, when we get above them. So looking really impulsive in silver. And if the dollar doesn't go higher but continues to break down, silver is going to be a really nice breakout long. Why? Because if we look at the weekly, we will have done a big, you know, correction. We're going to look for our first target. It's going to be back to retest 28 and then 35 on the upside. So we're waiting to see when is this correction over. And so the question we're really asking ourselves here is that we're going to see a bigger pullback like this, or are we just going to smash out of it and do that? So we might only get here, but I'm looking for up here in silver. So watching those fib levels. Now, it's a very big temptation on the first day of the month to jump into these huge, lovely monthly trades that you can see. I want to say that you've got to be really careful. Sometimes the first couple of days are fakey, wrong way moves. I would really like to see a fakey, wrong way move lower here because I'm ready to buy this. I would love to see that. So just be careful jumping in that two moves and that being the high or the low for the month, because it can, you know, we could end up in April, you know, with a pretty nasty, you know, month. So that's all I'm saying. We just need to be very careful. Okay, finally, let's talk about stock indexes. At the moment, everything looks so strong, doesn't it? So the S&Ps, let's go back to the weekly and start again, right? Just get into our head where we are. So I'm going to take everything off. So weekly chart of the S&P. So from the low that we made at the start of COVID in 2020 to this high that we made in 2021, this pullback was 50%. And then from this high to this low, this rally was 50%, and a pretty important pivot level. If I put my charts back on, let's tidy up. I'm gonna, I think that it's possible. Here's our 50% level, and this is where we are now, right? So on the upside, if we continue with this strength, then that retest that 50% level at 41.55 becomes the most likely, doesn't it? If we go down to the daily, you can see that we had a really strong stretch without any pullback, gap, up. This is the SPX. This is not the futures chart. This is the cash chart, so we can see where the gaps are. Now, if we say that this is just a three-wave correction, we've got a couple upside levels. First off, if that 786 is the S&P's favorite fib for a pullback, we're approaching it 41,112. One thing about the 786 is it's pretty sharp. So if we gap above or continue above 41,112, our next target is that 41.51 level. And remember, 41.55 is our big 50% level. Let's say that this was just a correction. I'm going to go down to the 4-hour to mark this. So what if this is a correction, three-wave drop, and we're going to look for an ABC here? Well, if I go from this low to this high to here, you can see that that equal measured move level is a little bit higher here, around that 41.55 level. Remember, they're not quite so sharp. So that points to us breaking above that 786 and going that a little bit higher, and then we could see a pullback there. There's a lot that could go wrong. The market is listening out for it. I really feel like, yeah, there's so much disinformation. So let's see. The Federal Reserve, like these, if oil, let's put it this way, if oil rips as a result of the actions taken by these OPEC countries with the cuts, so if oil continues higher, which I think it will, I think we could very easily see a retest of $100. That is really inflationary, and the Fed will know it, and the Fed will be watching it. Now, there is a theory that you shouldn't hike rates, you know, from outside pressures or imported inflation like oil, energy prices. But it will just add to all these inflationary pressures that we've got. Certainly, the Fed isn't going to be in a hurry to pause or cut if energy prices are ripping. One good thing about oil going up is that it does reduce the price, usually, of natural gas. Okay, so that's what I'm looking for in the S&P. I think that there may be a little Monday resistance here around 41.12. Let's take a look at the futures where we are. Remember, so we're going to put same swing. Okay, 41.29. So that 786 fib level in the futures is 41.29, and we're sideways at it. And the same thing, if we push, if we put our ABC on like this, that points to the 886 being the target. So although I think we could have a little pullback here, I think that we are likely to continue higher in the futures to 41.66 to 41.70. That's where the resistance, if this is just a bearish rally, that's where it'll be. If we don't, if we keep going, let's go to the daily in this S&P. Then we're going to retest this 50% high, which is a little bit higher at 41.97. And then remember, I think if we get above this 50% level, the S&P's favorite fib is the 786, which is all the way up here at 45.46, and that will be our spring rally all the way up here. So important resistance. The Nasdaq has already broken these highs, and big upside target for the S&P. Let's talk about the Nasdaq. Let's go to the weekly now. Remember, in the Nasdaq never got to that 50% level from the high that we made in 2021 November to the to the October low. We only paused at this 38.2 fib, 12.884. So for me, just look at this reaction at the 236 fib. Look at this lovely reaction at the 38.2 back to the 236. It's almost a no-brainer that we buy pullbacks in the Nasdaq, and we're going to be looking for this 50% level. And we might pause there, but I have to say the Nasdaq's favorite fib is the 61.8, which is all the way up here at 14.367. So I wouldn't be surprised if we got up to this 50%, did a pullback and kept going. So more upside, we're still looking for buying pullbacks in this Nasdaq. Now it may be that I don't think, but it may be that we come back to this 12.884 level, but that's where I'm wrong, and I think it's unlikely that we come all the way back there, but potentially this holiday this weekend and stuff going on. Let's see. Now, if I'm not sure, I always look at most recent fib swings and highs and lows. So clearly on this 4 hour, back to this swing low, back to the 4 hour 20 moving average, nice, easy to see 3-wave correction would be my ideal place in a pullback. These fibs are not helping. If I'm not sure, I'm going to say the 236 fib from the low lows, which is all the way down here. Yeah, it's not helping. So it might only be that we come back to 13,149. But if we do more than that, I would expect a bigger 50% of this swing, these highs, and I would expect back to 12,973. So again, it's the first trading day of the month. Trade carefully. We've got lots of data that will inform us, but we're a long way away from the Fed decision. So today we've got ISM manufacturing, which is half an hour after the open. Tomorrow we've got the JOLTS job openings, also half an hour after the open, and the RBA. On Wednesday early we've got the Bank of New Zealand, and we've got the ADP numbers, ISM, PMI, but the big one of course will be on Friday, which is non-farm payrolls. Okay, let's take a look at a couple of other indexes before we go. First off, the DAX. Big deal resistance level in the DAX. This 886 fib level. It's also a big equal measured move level. So it may be that the DAX is going to give us an early indication here. Now, clearly, if we go to the monthly in the DAX and put regular candles on, we're in a pretty nice uptrend, and we're retesting all time forever highs here in the DAX. You would think that there was nothing wrong in the world, wouldn't you? Now, from this high to this low, clearly this is the 886, and this is just a short-term measured move if we're doing a three-way correction here. And we can say pretty clearly, although we've had this nasty dip, right? But there was no close underneath on this pullback underneath this 786, although we dipped down to here. So in terms of trend, this is all looking pretty nice, isn't it? Marginal new high here. And if this, the only reason I think that we might pause here is if this was A and then we go B and we do C, we might. But if I'm wrong, so this is a really strong new upswing, we should see a shallow pullback. We shouldn't go underneath this 786 again now, all these daily moving averages. That should be the most of this pullback, and we retest the highs and see what happens there. So again, we're going to go in the DAX. I have to say this looks like a wave 3. So 1, 2, 3. So like just like the Nasdaq, 38.2 short term of this swing, maybe 50%. In the middle here would be where I'd be looking for. So here's our 236 fib level. And I would be bearish if we went underneath the 236 fib from the lows and looking for a bigger start of the month correction. So 15,534 is like my bear line. And this gap here. So wouldn't be surprised to see a pullback to start the month. It will be a bigger pullback if we lose 15,534 in the Nasdaq. In a wave 5, you know, things can get pretty choppy and overlapping. So, you know, we could easily come all the way back to here and underneath this high. And that would just tell us that we're in you know, it wouldn't be necessarily the end of the world. It would just suggest that it's an ending diagonal if we lost this high. Okay. Right, let's take a look at the SPX and the Australian ASX. So first off, sorry. Hold on, not having much luck. Here we go, S&P TSX Index. Now, again, start with the weekly. Not at new highs in this one, But remember that pattern that I was looking for in the S&P. So up, an irregular correction, and then carry on. That's what I'm looking for here in this TSX. So it looks like this irregular correction is over, and this 50% above, back above the 20,000 level should tell us. Now, so we've done that 61.8, 38 point thing twice. So for me, that pretty much is correction over. We're back above these weekly moving averages and pushing higher. So 20,043 is pretty good trend support here for the TSX, and I think that this, if we can hold it today, means that we continue higher, 20,555, and hopefully that's 786, and then higher next. It's all a big corrective pattern, but we're in that C leg, I hope, now. So either this is a wave 1 and we've done a 2 and we're going to do a really strong wave 3 that takes us to new highs, or this is a wave 1, this is our wave 2, and we're going to do a wave 3 that takes us to the Gartley pattern target at 21,284, or potentially we're going to look for where this is, the 61.8. Just to retest the highs, look, the 886 up here would be our second target, 21,945. So retest the highs, 21,284, and then obviously up here towards 22,000. Looking pretty strong. So short-term support 20,000 today in the TSX if we're going to keep going higher, and the ASX. Let's take a look at this one. I'm going to wait for this one till tomorrow, because the RBA can really screw things up. But if you were to put a gun to my head, I would say that again, I think this is the end of wave 3, little wave 4 correction. We should go higher here, and we're sideways at this 50% and previous lows. So yeah, I'll take a look at the ASX again after the RBA tomorrow morning. Okay, I hope that's useful. I'll be back. Send me any crypto requests you've got, or any stocks you would like to look at. We're going to do a big crypto, and I'm going to try and do it live tonight.